All right. Good morning. How are you today? I hope you are just fine. My name is Wayne McDonald. I will be your guide on this journey we call Forex. Thank you for being a subscriber of Forex.Today, the YouTube community of almost 19,000 foreign exchange traders. Now, bear in mind, the Forex community is quite small, so 19,000 I think is pretty impressive. So we are here to conduct both technical and fundamental analysis with the overriding goal of putting together trade plans for Tuesday, the 21st of September 2021. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. So thank you for being here. Thank you for your contributions to this community. Thank you for your hard work and effort as a trader trying to improve. And of course, your positive energy is also appreciated. Thank you for treating me with dignity and respect and the loyalty that you show to me every single day. I honestly appreciate that. So ask questions, get involved, take notes. This is an opportunity to learn. We got big events happening this week, and the biggest one, of course, is being the Fed, but there's a lot of other things going on. Very interesting stuff. Cool. So luckily we can endure this together. I'd like to recommend tradersway.com. You're a trader, they're a broker. There's an opportunity to fall in love. What are some of the things you're probably looking for? Fast execution speed? They got it. Narrow spreads? Oh yeah, they got it. Big swaps? Yeah, they got it. And that's quite rare. World-class customer service? All of that. Yes. They earn my loyalty and respect. Maybe they can earn yours. Start that relationship. Tradersway.com. Open up a demo account. Cool. You ready? All right, let's see where in the world we are. Up, down, sideways. Well, at least the down part is hopeful. Up, down. Hey, even better. That's the beginning, huh? Thiago's trade might be working out if that dollar is weakening. Euro's giving back some. Down for the kitty cat recovery. Great. Down. Recovery for Swissy. Down. A little bit of recovery for Kiwi. Little bit of recovery for Aussie. And So not a lot has changed. The most important things that I see here is this. Actually, this is probably the most important one. So this tells us stock market up. Okay. I look at this and I say moderate recovery in the stock market. Great. Check out the 10-year bond yield. Okay. A little bit of recovery here. What does that create? Dollar weakness. Just to catch everybody up in case you're new, this means dollar weakness. This means dollar strength. This means dollar weakness. And what I want to see is I want to see the yield on the 10-year going up, and I want to see the US dollar falling. So, very good. So I see this, and this makes sense to me. Okay? Previous to that, we had this dollar strength during this period. So that's good. Good. Everything is right as rain. Okay? Very good. And of course, after the Fed meeting, I want to see this go even higher. I'd like this to end the year like 1.85. What do you think of that? Hey, the kids in the house. Francisco. I always think of Elf. Francisco, I like the way that feels when I say it. It rolls in my mouth. Something like that. He's like, yeah, that's why I changed it to Cisco. Francisco. Yeah, it's funny when you see like I saw an interview with Will Smith, and he's like, yeah, he did his 8 years or something on Saturday Night Live, and he said he had nothing to do. He had nothing to do. He's like, I had no certainty in my career. I left Saturday Night Live, and he said there was a frat boy movie about 40-year-old men that start a fraternity, and he's like, there was no script. It was just some sort of like, hey, let's make a frat boy movie for 40-year-olds. And he's like, okay. And then the other one is you had to dress up as an elf. And that was it. The story when they pitched it to him is, okay, you're a human raised at the North Pole as an elf. And he's like, that's it. That's what he had after leaving Saturday Night Live. And like both movies had to be written. And he's like, okay. Good for him, huh? He went on to build quite a career. Anyways, I thought that was quite... oops. Look at that. Everything just went away. I thought that was a quite nice little movie. Hang on. Everything just went away. Thank you, Windows, for doing that. I gotta find my chat. Everything's gone. What a great Windows feature. All right, cool. Oh, you just had to watch it the other day, huh? That's cool. All right. All right. So anyways, dollar weakness. Good. Good. All right. Fine. Let's take a look around the world. Let's start with commodities. Okay. Did anyone buy Bitcoin at 40K? Did anybody catch that? Well, good luck to you, my friend. Cool. Technical analysis alone says if this is your top, this is the bottom of your range. And the bottom of the range is 39,365. So somebody said, let's just call that 40K. Yes, Barry. Have you been vaccinated, Barry? All right. No, capital too. No way. All right. Well, I hope you still. I hope we're still friends. Okay, so anyways, WTI sitting on 70. Bounced from 70 to 71. That's good. See, I want to be vaccinated, Barry, because I want to fly down to Miami and party with Maida, and then jump in a plane, flight out to the Caribbean, party with Gary. And you just got to be vaccinated to do these things. So. Anyway, so there's that. There's that. Gold, I guess. We take a look at gold here, the little recovery. No, but I don't know. Yeah, I've been all around the United States, right? I've been to Florida twice during COVID. Anyways, just doing my job here, kind of outlining things. Okay. Nice little bouncy bounce. The nice thing about this, and there's a lot of them that are occurring, it's at the exact price. So you might recall just even back on Sunday and Monday, especially if you're in my day trading group. We met on Sunday, we met on Monday, we met again on Monday, and then we met, right? Like we meet a lot in the day trading group. 3 times a day we get to hang out. And back here, one of the things I was talking about then is we have the right price, but it's not the right time. Okay, so you have price over here and you have time over here. And that's when technical analysis kicks in. You want to look for reversal patterns. Okay, like a double bottom. That's a good one. A 1, 2, 3. That's a good one. Whatever. Okay. And so is this a double bottom? Could be. Is this the higher high inside of this move? Let's see if I can zoom in a little bit more. Okay, can you see one in here? Oops. Okay, there's the double bottom, higher high. Look at this. So is this tradable? Yes. Is this tradable? Yeah. Should you? Like, must you? Is it a requirement? No, not at all. No. Okay. Okay. Cool. But could you? Yeah. Could you avoid it because you're concerned about the Fed meeting and all that? Yeah. But can you do that? Yeah. My comment back on Sunday and Monday was, don't buy it simply because it's this pivot point or this pivot point. There's 2 pivot points in there. One's weekly, one's monthly. But do you do it because it's a pivot point? No. Don't do anything because of a pivot point. Don't do anything because of a MACD cross. Those are just lines in the sand. But what do you do if you hit that key pivot point and you get a double bottom, higher high, higher low? Well, then you have permission to engage. Okay? Oops. Now, how about this one? It's the same trade, it's just on a higher time frame. Barry, that's way too personal and private. I'm sorry, I can't share that information. Cool. Higher high. Okay. Now what? Well, if you're going to stay inside the range, or if you're going to trade a breakout of the range. Okay. Now you might actually already be trading the breakout. You might have the breakout this way. Okay. So much more than technical, it's more like, hey man, how do you feel about trading before the Fed meeting? I think that's the bigger issue. So Matrix flies on his own jet. I don't own a jet, but in my old neighborhood, we're friends with the people that bought the house behind my house, and they fly on their private jet. So the jet flies into the local airport and stuff like that. So, you know, it's funny because their kids are about the same age as mine, and they've never flown on a commercial aircraft. And it sucks because they're really nice people and their kids are really nice and you just want to hate them. Like, F you. Oh, my kids have never. All right. Boom. We got a move here. Very nice. Cool. So that's nice. Let's see if this is kicking in anywhere else. Let's do some dollar pairs. Okay. Oh, nervous nilly market. Nervous nilly market. Okay, I'm going to put this to bullish daily. Day trading bullish bias. Okay, you got a front run. You got a front run. Okay, I'm going to turn this. That's bearish, that's fine. I'm going to turn this daily day trading bullish. Going to change this. Day trading bullish. Okay. So you got a front run on euro dollar. Kitty cat, I'll just leave alone for a second. Okay. This isn't much of a step up, but it's not a step down. So there's a small front run there. Okay. And once again, plausible front run. Johnny wants to take a look at the kitty cat, so let me go back. No boot camper left behind. Let's change this template. Day trading bearish. And the front run is here. Yeah. That one's harder to catch. It wasn't as perfect as some of the other ones. Okay, want to take a look at yen yen. Yen yen. Talk about yen yen. Okay, wow. Okay, wow. I want to look at beast. Just, wow, just in the 5 minutes, total collapse, total reversal. Cleaning house, huh? Template, day trading bullish bias. We're in today's buy zone. The sad thing about this one is because of this breach, I moved my stop to about break even. I think I had a 5 pip stop. And of course, this move down was enough. It was enough. So, gotta maybe try again later today. You got it at 17. That's nice, man. That's nice. The one down here. Well, wait. No, you got it way down here. Yeah, that's nice, man. I like that one, Olin. I don't know how you got it that low. 49.17. Jeez, Murphy. I don't know how you did that one. Traded a double bottom, I guess. Yeah, you caught this one down? Yeah, so like this is difficult for me to do all this and explain things while I'm coaching, but yeah, in it there is aggressive New York Open. It's not really a fib. It's, you know, you can see it's tomorrow's M2. So maybe I can catch it later today. Let's take a look. Okay. It's not like this is unexpected. Hey, I drew it on the chart on Monday. Anyways, okay, so it just might be happening. So this might be interesting, right? You can see I have a bottom here and a bottom there. So that's what's just been produced. Remember, it's not technically, you know, remotely bullish while we're below this price level. So really what you're doing as a bull is you're buying, you know, you're buying tests of a range. So I kind of look at it currently, if, by the way, I'm a bull, and I understand this is completely bearish, but it doesn't mean I'm selling. It doesn't mean I'm buying either. But the way I'm looking at this through the lens of bullishness is that, you know, you buy these tests. Okay? That's all. And eventually we'll get a break, and that's where I have real potential for this to be a bullish market and no longer a bearish market. Okay, so until we get there, I'm thinking down, sideways, and then up. Okay, and it typically goes. Okay, so you know, great. I think right now people are battling for their positions. People are digging their trenches. Okay. Don't be in the middle, right? Don't set up shop in the middle. Buy it very, very low or sell it very, very high. Don't get caught in the middle. Don't be late. Don't be lazy. Don't react to these things. Look, if you just saw like a giant candle drop like a ton of bricks followed by a giant green candle, what does that tell you? People had orders in the market. So if you go, oh my God, what just happened? Look at that candle. I guess I'm supposed to be, oh my God. You're doing the opposite of what the professionals are doing, right? If you just saw a big candle over the course of 5 minutes drop like this and suddenly follow up like that, it just tells you people already had their orders in. They planned ahead. Okay? So if you just see a giant candle and then you look at everyone and you realize you should be doing something, you should be not doing something. Right? Cool. So let's like take a look at this, you know, technically speaking, what could we do? You know, we can mark this out. And how do we want to define this? There's sort of a bottomish in there. Take a look at this. Was there a fib? Doesn't look like it. So a lot of these, they're not really fibbing. There's 786s, if anything, which predicts tops, right? So you should know that it might look like a trend, but I don't think it is. Okay, so if you're going to use Fibonacci and you measure this and you see this is approximately 78.6, what it's predicting is this. Okay. Okay. So to me, this looks like part of that consolidation phase. Okay. And then after the Fed meeting, we get some liftoff. Okay. So very interesting, though. We might have something to do today. Keep your eyes on your charts. Okay. Euro, how's she doing? Well, we have a number down here. We're looking at 128. Currently, it only fell to 128.14. I know, right? You know, there were a few trades that looked all right yesterday in the Asian session. A couple of problems, of course. Most Asian trading exchanges and trading markets were closed to holiday in Asia, so that's going to suck the wind out of your sails. And also the big Fed meeting, right? And there were some yens that I wanted to buy that were not too bad, that were on support. I don't remember specifically which ones, but I remember right before going to bed that a lot of them were still below their hourly 21. And I kind of chuckled. I'm like, why am I so hungry? Why am I so eager, right? Like, if it's bearish on an hourly chart, son, back off, right? So anyways, just a comment here. I'm looking at this 21. I'm like, okay, even if I want to be a bull, there's nothing bullish about that yet. I got lots of time. Lots of time. Cool. Yeah. I did buy this one, though. And now I'm out. 4 minus 5 pips. Yes, I was up 50 pips. I understand that. I was sleeping. What can I do? Okay. So this is interesting. I got to incorporate that. And so, you know. Okay. So that's good. There's a little bit of hope here. Can you see the little bit of hope? Let me remove the fib here. Do you actually see the little bit of hope? Let me outline that. I can't see the, oh, this one. And then there's this one. Then there's this one. All right, what do you notice about all these? They all have a positive slope. There's another one here. Okay. So it's okay. It's okay. It's not great. But what I'm thinking is this move combined with that move shows some potential. So one way, if you're going to try to play that, you can do like a parallel line. Try to predict the future that way. So you can go custom. Wait, we probably have one here. No. Insert. Indicator. Maybe channel. Linear. Standard. Equidistant. Okay. And then you can throw a ray on this. Boom. Okay? You can say to yourself, that's what you're trading. As long as you're climbing that ladder, you're happy. Yeah, you never want a little bit of hope, right? You want all of it. That made me think of like how exhausting it is to watch the movie The Pianist. It's so exhausting because there's always hope that it's going to get better. And it just gets worse and worse. It's just, oh, well, maybe this will be better. And, oh, well, they got out of this bad situation, so the next situation could be better. And it's worse. You know, it's just, it wears you down. And I think that's the point of the movie. So a little bit of hope. Yeah. Well, Theta says the Fed will surprise. The thing is, the Fed is doing its best to not surprise people. So it's really how wrong market participants are. I still think the Fed is very bearish, or sorry, dovish, and want to do nothing. The question is the market ready for that? Okay. So what do you think? We're back in my price. I got wiped out. Should I try again? Should I try again? That's going to be the question of the day. Can I get another? Can I get another? Can I get another? Sir, yes, sir. Can I have another, sir? Okay, so that's it. That's the big question of the day. These are all little Hail Marys, really. Get a trade in, jam the stop, and see if you can survive 24 hours. There's not much more to it. I don't think there's much fundamentals left. It's people digging trenches. Okay? So either you're in the Allied side or you're in the Axis side. Doesn't really matter. Pick a side. Dig deep. Hold your own. Do your job. But it's the ones that just sit in the middle that are almost certainly going to get killed. Okay? Pick a team and play well. Yeah. Yeah, if you're not with the trend, then you're against the trend. The thing is, this logical move that occurred, non-farm payrolls, okay, they all happened at the same time, I think is over. Now, of course, I don't know. So you can say, well, that's Wayne's guess. The thing is, we have something new coming tomorrow. It'll either drive this up or it'll drive it down, but it will be different. This will be different from what happens next. Okay? Okay? Taper schedule is alluded to, announced, anticipated. This goes up. The Fed says, you know what? We're not even going to announce a taper this year. Then this comes down. Now, one of the things we talked about in the day trading group last night was the non-technical and non-fundamental logic of the announcement and its impact on behavioral finance. And I used game theory as an example of what is in the mind of the Fed official. Because the Fed knows they will need to do these things. The issue is when do they announce it? So we talked about, again, the game theory and behavioral finance behind Jay Powell's decision-making process of when, because we know what the announcement is. When they say they're going to taper, they're going to taper. We know what that means. Then the next thing is, well, how fast are you going to taper? Well, okay, well, it doesn't change anything except the timeline, but eventually, whether it's 1 year or 18 months, eventually there is no more quantitative easing. Great. So it just kind of delays and defers what's going to happen anyways. And the interesting thing is it doesn't matter because, again, I used game theory as an example. If they're going to be out of quantitative easing in 18 months, 12 months, or 6 months, well, the end is already known. So it doesn't matter when the end is because the end is known, it dictates your first move in the game. And once you know your first move, everything else is predictable, right? So anyways, I think, interesting discussion outside of technical and fundamental analysis. It's like, if you were the central banker, what would you do? And that's what our thought process was yesterday. Elm says, hello, what would be a good Sharpe ratio? Well, okay, now that's subjective. Let's talk about what a Sharpe ratio is, okay? It's your return over your volatility. Okay? Now, some might say your return minus your risk-free. Okay? Okay? Whatever. But you don't have to really do that. Okay, so your return over your volatility. So what is this? This is a risk-adjusted performance. Now, to answer your question, I have to define what that means. What is risk-adjusted performance? For every dollar you make, right? You want to see how much was at risk. Okay, so if you risked $1 and you earned $1, you were compensated adequately. Okay? You got that, Elm? Elm, let me know you're even listening. Okay? I just want to know if you're even listening. What this means, so you have a Sharpe ratio of 1. Okay? Now it's a ratio, which means you're fairly compensated for the risk you took. That's why you might say, well, you could have had no risk and earned, 1.3 on the 10-year T-note. So now you might say, okay, the return minus the 1.3, because you could have no risk and get 1.3. So, you subtract that out. And if so for example, if you throw this down and change it, you'll earn less than 1. Your Sharpe ratio will be less than 1, right? Right? You'll have a Sharpe ratio of 8.7, for example. Okay, 0.87 over 1. And what happens is now you're not fairly compensated for the risk. You're closely, right? But for the risk, you should have earned a little bit more. That's what this means. Okay? No, it's not risk reward. It's literally how much did you earn for the risk you took. So for every 1 unit of risk, you earned less than 1 unit of reward. Now you're profitable, but you're undercompensated. You might do better somewhere else. Okay? Now, if you have low volatility and reasonable return, okay, you might, let's say, earn 1.5 over 1, and that gets you your Sharpe ratio of 1.5, which means for every unit of risk you took, you earned 1.5 reward. You're more than fairly compensated. That's a good deal. Okay? So think of it this way. A Sharpe ratio of 2 is fantastic. Now, we're not talking about return and money and all that kind of stuff. Okay? What we're looking at is, the way this is done, by the way, an investor will look at, let's say, 3 commodity trading advisors, 3 CTAs. Okay? And they'll look at them and they can say, well, okay, one made 27% last year or currently this year. Another one made 32%, and the other one made 18%. You're like, well, which one do you invest in? Okay. This one had a 3% drawdown. This one had a 40% drawdown. And this one had a 15% drawdown. This one has 100,000 in the account. This one has 300,000 in the account. And this one has 4 million in the account. All of a sudden, like when you start throwing these things, you're like, oh, wait, ooh, okay, that matters, that matters, that matters. Okay, that might matter. Now, this will not impact your Sharpe ratio, but it might help you understand the reasoning behind the trading strategy. And you might start looking at these things and, this one might have a Sharpe ratio of let's say 2.1 and 0.87 and let's just say 1.2. You're not looking at how much money they made, okay? But this volatility really impacted the performance. Even though it's done the best, it also has done the worst. Does equity curve matter? No, it does not, because it's bullshit. Who cares? Okay? This is a ratio of risk to reward. So, look, if you're an institutional player, there's no way in hell you would accept a negative 40. Okay? So what this is telling you is any given day on the track record, you don't know if you'll be profitable or not profitable, right? And when you measure will matter. So you don't know at the end of the week or at the end of the month or at the end of the quarter whether you could go now to your investors and say, well, hey, we're making money this quarter, or hey, man, we're way down. Think of it this way, guys. Have you ever, or just imagine having to do this, call your investors and tell them not to panic because you're down 25%. And you're like, oh, it's just whatever. It's just this problem. It's just this thing, but we'll work our way out. Dude, that's a bad conversation. And it's a career killer. So with somebody with no money, maybe this is acceptable. But when you add it all together, right, when you're trying to be an investor now, choosing, so this guy might be up, right, well, percentage-wise is the best, most profitable of them all, but you would look at it and say, I'm not even fairly compensated. I haven't even adjusted for my risk-free rate of return. Okay, the one that currently is producing 32% annual returns is not worth investing into. You can do something better with your money. And it's the volatility that's the killer. Now, this one has significantly less volatility, pretty decent returns. Okay, so this might even be closer. This would be higher than 1.2. Okay, this might be closer to like 1.8, let's say. But here's the thing. They're so tiny, they only have 100K. Well, what if you want to deploy $1 million? You're like, dude, they're too small. And you don't know if they can scale. And if you said, okay, go from your 1 mini lot to 10 standard lots with our new money, this person might not be able to handle that psychologically. Now, we all say, oh, yeah, it's no big deal. It's the same trade. Yeah. But you know it's true. It is a problem. So they're too small, but they're performing well. So you want to say, you know what, we're going to keep our eyes on you. Come back in 5 years. And if you still have a Sharpe ratio like you have now, we're going to want to invest. But this might just be lucky. This might just be the first year because they're small and it's not a big deal. Lastly, you look at someone that's got real money, decent return, and small drawdown. Their Sharpe ratio is going to be really good. So whatever the actual number is, it doesn't matter. I mean, you're probably doing the math and you're like, Wayne, the math is way off. Doesn't matter. My point is you're going to look at this and say, the Sharpe ratio is favorable. Check, I like that. For every dollar I put in, I can expect $2 out. Love it. 18% is reasonable, okay, because the stock market is typically 8% a year, not 18. And I love the drawdown. I'm never losing sleep at night. And they have adequate capitalization. So if you threw in 500K, it wouldn't change a thing here. If you threw even in $1 million, it's great. It's great. If you moved them from, pre-money 4, post-money 5, 20% change, you're all good. You're like, yeah, okay, this fits. This is an investable firm, and it's only got 18%. Okay? And so that's how an investor looks at a Sharpe ratio. You're trying to compare, pears to apples to oranges. It's not easy. So you got to sort of, break it down into pieces and be able to compare them. And then I threw this in there just for discussion because that's how an investor is going to look at it. You might have a really nice Sharpe ratio, very high returns, reasonable, drawdown, but you're just so small that they'll say, come back in a couple of years. Okay? Go get your rich uncle to throw in some money. Talk to your dentist and your chiropractor. They'll throw, 50 grand your way and come back, when you got that closer to, 1M. And if you still have a Sharpe ratio of 18, yeah, we'll fund you and get you to the next level. Okay? So you'll have to compensate by friends, families, and fool investing in you and more of a track record to show that this isn't luck. Because that's the next thing is you might have a decent Sharpe ratio now. What someone wants to see is, Sharpe ratios over longer periods of time. Okay? This is why I preach consistency so much, because you're like, Wayne, I'm up 32%. Yet no one's going to invest. Because your Sharpe ratio sucks. Why does your Sharpe ratio suck? Because you're a boom and bust trader. Nobody's interested. Okay? Hot one day, cold the next. Nobody's interested. You're supposed to be a cash flow stream. See, your biggest competitor right now is real estate. Okay? Every month, the owner of real estate collects rent, pays expenses. Okay? That's your net operating income. Okay? minus, right, your mortgage payment. Okay, and now you have your profit, your bottom line profit. Cool. This comes in. You can count on this. Rent will come in. Expenses are quite stable. Rent is quite stable. Your mortgage is fixed. So you can basically, an investor can expect a certain level of profit. Then there's other games you play like amortization and how, you know, every 5 years you're going to pull out equity and pay yourself. But I'm just talking about flow per month. Very, very, very stable. Okay? Or they give you some money and you're like, hey man, I could be up 15% per month. I could be negative 15% per month. And it's a crapshoot. Up, down, 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 down. So the investor's like, well, you pitch me here and then we're here and then we're here and then I look at it here and then we're here and like, what is it? How much money will I have at the end of the year? We really don't know. It could be a lot. It could be no. So they're going to say, okay, that's kind of exciting, but you know, I want the easy money. Okay. People just want to hang out at the country club and, you know, have vodka tonics all day. They don't need your excitement. Okay. Remember, excitement's for poor people that are gambling to get rich. If you're already rich, you're going to do everything you can to not have to gamble. Okay. Theta says, hey, what if they said the decision will be December? We'll find out. Think about what the market's going to do. Think about the bond market. Okay. Cool. So I think we'll leave it at that. That was pretty reasonable. I feel all right with that. We went through all the technicals. We had a nice little discussion on Sharpe ratios. That's really nice. I hope that was understandable and educational. If so, would you please click the like button? And I think that will be it. Tomorrow's the Fed meeting. Oy vey, it's important, huh? Wowzer. The Fed meeting actually starts today. It's tomorrow is the announcement. So today they're doing the blue book. So I guess probably 9 a.m. is when it starts. I just want to leave you with this thought. There's 2 days of meetings. There are multiple presentations. The green book, the blue book, everyone already has the beige book. Multiple people. There's the chief analyst does their presentation. They look at their economic outlook. They even look at things like if they taper, this is what is expected to happen. If they don't taper, this is what's expected to happen. And that's part of the debate of the FOMC tomorrow. But the very, 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 very first speaker who's probably going to take the microphone after brief introductions and opening remarks by the chair of the Board of Governors, which is Jay Powell. So he'll do his opening remarks, and then he'll give the floor to the first speaker. Okay, and that is the head of the dealing desk at the New York Fed. So yes, the first official speaker of every FOMC meeting is the Forex guy. Okay. How do you get into my private trading group? Okay, you go to fxbootcamp.com. You pay money. Cool. Then it says, hey, you want to upgrade to the swing trading group? You say yes to that. And then there's a little secret bump. Once you're in the swing trading group, the stay trading group is just a one of a kind, one-time thing. And so yes, then you can pay for that, but it's one time payment, and that's access multiple times a day between now and the end of the year. Look at this. Oh my God, that is so great. Anyways, cool. So yeah, is it easy to get into the private trading group? No, it's not easy. But if you fight for it, you'll be welcomed. So peace on earth. May the pips be with you. May your profits be above average. I will see you. I'll see you when I see you. Cheers.